Good morning, folks, and welcome to another episode with Bob Iaccino. Today, we're going to talk about how to use rotation zones and the trend lines together. Bob, how's it going?
Good. How are you, man?
I am good. I'm happy to be back in the U.S. So it doesn't look like I was in a man cave the whole time behind me at night. But no, man, excited to be back. How have you been?
Good. It was a good yet quiet Fourth of July. We have I'm down here in Florida, where fireworks are legal,
Mm.
and I also have a dog that is scared to death of fireworks. So it's never a joy for me when the Fourth of July comes around because the dog is just shivering. But we didn't have many this year, and I think it was because of torrential downpours that have been happening this year. But we went to a rooftop restaurant, just kind of watched 360-degree fireworks while we ate. And I realized that as I approach 60, I don't really care about fireworks much anymore. How's
Yeah,
that?
I mean, it makes sense. It might, hurt your eardrums and things like that. So it's quite.
No, it's not. Yeah, just like, okay, boom, stars, yay. That's all. I don't care about the rest of it.
Talk to a therapist about that. But talk to us about the rotation zones and kind of trend lines together. I know you've got your uh, charts to be shared. But before I get to that, I'm going to go ahead and share the disclaimer. Again, as always, anything that I say, anything that Bob says is our opinion only and does not reflect TradeZero. We always, always, always want you to do your own due diligence. Conversations we have are for entertainment and education purposes only. All right, here we go. What you got?
You know, the cool thing about the way we draw trend lines in the first place, and I just drew this one here, which it's not really an active trend line anymore, right? But you'll notice these distances in between the trend lines as you go. And that's actually something called a GANN fan. Now, there are tools out there that actually draw these GANN fans for you. And you'll notice that as you get to a certain time in the future, these spaces tend to have the GAN levels in terms of differences, right?
Yeah.
It'll be 25% difference, 32.5 or 37.5% difference, 50% difference. It goes along the same levels as the GAN fans do. I've never really used GAN fans. I use the trend lines themselves, and somebody who was a big GAN proponent, as I was teaching him these trend lines, actually pointed it out to me. But when you talk about rotation zones, I've mentioned a bunch of times that I don't trade the crosses, which is happening right here, right? You can see the cross of the 8 moving above the 21. For those of you that are new here, the rotation zone is the 8 exponential moving average and the 21 exponential moving average after they've crossed and they start to angle and widen. Okay, prior to that, there's no rotation zone. Right here, there's no rotation zone, right? Because they're just kind of flat and they're almost parallel at that point. Same thing here. There's no rotation zone here. There's nothing to do with this particular area.
Mhm.
This is different. Okay. If this continues in the direction it's going, that will also be different, right? You see that they've crossed and you see that they're starting to widen apart and they're starting to angle. So this is now developing a rotation zone. We also had a break of this particular trend line, right? Now, the target of this particular trend line, as I mentioned in our trend line sections, will be the defining point of the trend line. I'm going to make that my normal target colors, which is green. When you're looking at a trend line in the way that I draw them, okay, it is there. An initiating point, which is right here, and a defining point, which is right here. Okay. Whenever you break a trend line, the first target is always the defining point, regardless of how close that defining point is. So this will actually be meeting up with the second trend line right around here, right? So I would predict somewhere in this area here is where this trend line, if it's going to be hit, will be hit and get a little bit of pullback. Because at that same time, we'll likely have an upward sloping rotation zone. This is the next buy area for this. Okay, wherever these two, they don't have to exactly intersect. Okay, but you'll notice a failure up near the trend line. When it reaches this defining point, you'll see a little bit of a pullback. If that is a pullback into the rotation zone, you'll know two things. Number one, the rotation zone to the trend line is going to be your first sort of measurement area. All right, I don't really think I can draw on this particular one. Maybe I can use this tool here. It's just, yeah, this does it. Okay. So what you'll see is a movement sort of like this, because things don't always go straight up. Okay. And somewhere in here, you're going to get a failure against this this defining point. It'll hit there and it'll fail, whether it's a candle that actually does this, okay, goes down like that, or whether it's a candle that just kind of goes here, spikes to here, and then reverses. There's two different ways that it can do it, right? So that's what we're going to be looking for in terms of what's going to happen. At that point, the rotation zone will likely look something like this. Okay, now that's obviously a really rough drawing of it. But if we get this failure anywhere where I've drawn this circle and then that comes into the rotation zone, I'm not sure how to get rid of these. I'm sure there's an eraser in here somewhere. Let me just reverse them all out. All right. If at that point we have this rotation zone that's come like this, okay, and we get the move down into here, you'll then take this tool, draw the trend line. Stop doing that. Don't want to do that. I don't know how to get rid of this now. Let me just do this. Go back to super charts and go back to Gilead. We're there already. Okay. So if at some point you get that move, what you'll then do is you'll take this tool and you'll draw this trend line here, and you know that you'll get a breakout at some point. It's also going to have to break this trend line, okay, in order to get a strong move. Now, if it happens somewhere through the trend line in this area here, you're much better off. You've got a clean trade. So when you're trying to combine these two things, you're trying to look at one as sort of a trigger to the next trade, a target to the next trade, but also potentially something that gets in the way of the next trade. So it's more going to be a filter than any sort of a signal. Does
Now,
that make sense?
yeah, it does. Now, are you waiting for a test of the trend line?
This particular one?
Correct. Yeah. Well, no,
No,
sorry.
I don't care
No,
about
no,
that.
no, no. The one lower, the one with the EMA there.
I would love to see that, okay?
Yeah.
Because then if I use this tool again, if we start to get a move down here, this is going to continue to move higher because it's the 8, right? And this is going to continue to move higher, but because it's the 21, it's going to move at a slower pace, right? Yeah. So that's sort of the way that they develop, is you get these movements like that and they sort of separate out, right? So you get the 8 coming much sharper because it's the shorter moving average, and the 21 will move much slower. So if we get a move down here as well as testing the trend line, so now you've got what I've called a kiss the trend line goodbye, and you've got a test of the trend line. That's a really good setup. That's a really strong setup. Now, it doesn't mean that I risk more. You and I've talked about that in the past. It certainly does not mean that I risk more when I'm trading it, but it does mean to me that we're likely to get a move back higher, and I can do the trade of the kiss of the trend line trade mixed with the rotation zone trade, and it becomes a very solid trade for me. It becomes a trade that I sleep better with.
All right. What other? So are there certain types of markets where these will work, right? So what is it, like a bull market strategy? Is it a bear market strategy? You know, if you could flip it and different things like that, or like where does it kind of work the best? And what type of conditions for the market to be in?
Well, with stocks, I'll tell you that the bull market setup is always better.
Of course.
Right.
Yeah.
It's always better because stocks are in sort of a perpetual bull market, right? And I've talked about this at a speech I gave recently. Stocks are the only thing that have a natural upward bias, right? There's always money going into long only parts of the stock market.
Yeah.
Essentially, it always happens, right?
Okay.
So when you look at it from that perspective, you're always looking at a stock market that is trying to correct and trying to poise in order to go back up, right? So when you look at it from that perspective, it's always better on the long side.
Mm-hmm.
Now, on the negative side, you know, we saw, I honestly can't get rid of this tool. It drives me crazy that I tried to use it because now I can't seem to eject from it.
You be able to, there's a delete button all the way on the bottom. Maybe that's it. And now
I don't even know how I got rid of this.
I don't even know what's happening right now.
Well, I'm getting rid of this whole thing and I'm reopening it because it drives me crazy when I can't get it in the middle of a webinar like this. When you're looking at it to the downside, it would be exactly the same setup, but you're always better off with stocks going on the upside. I mean, even if I look at something like here, let me look at a trade that I was looking at that I exited. This IonQ.
Yeah.
Okay. The vast majority of the market, I'm going to present it. I know you're looking at it going, he's not presenting it right now, but I will be looking at it. So IonQ is a pretty strong performer through May and through the month of May, right? You look at this parabolic move here, right? And it got back to the breakout level here, and it's not only closing below the breakout level, but it's closing below the 200, right? And now you have a rotation zone that is developing already. It's actually formed. You see it right here?
Mm-hmm.
Let me move into it here. I'm going to get rid of the green for a second, which is the 50. Okay. And you can see this clean rotation zone developing here. And you can see that here we had our first short trade theoretically off the rotation zone, right? So just to kind of clarify what this looks like. And we have something here with the 200 that kind of matches the trend line. It's sort of the same situation, right? You have the 200 here instead of a trend line. But you could have a sloping trend line in here. So we had to move up into the rotation zone. You draw this sort of best fit trend line here as it goes up in the rotation zone. And here's our close below, and here's the extended move lower, right? Go ahead.
Well, so no, I mean, I see what you're, see, here's a problem that I have with trades kind of, where there's so many different setups, or at least different ways to do it. Because you've got like your EMAs, you've got the rotation zones you're talking about, you've got the break to the downside as well. Now, this red line that you have, is that a previous support that you had marked out, or is that something else?
This red line?
Yeah.
Or this one?
That one. Yeah. The actual.
That's a stop level for a trade I was looking at.
Okay, gotcha.
So I can get rid of that as well.
Okay.
Because the stop would be a close below that red line.
Yeah, because sometimes I think myself and others possibly struggle with the aspect of, okay, I can enter here because this system works out this way, but where the stop loss is, where another system would tell me to get in because of XYZ. All valid systems, but just so many different ways to play it. It's like, which one do you really follow? And I think that's where.
Well, number one, I would say, I don't know if they're all valid systems, right? Because I don't know what we're talking about.
Yeah.
That particular red line, again, was a stop level. So there's no real buy here that I can see.
Yeah.
And I would point to it, like if I put the 50-day moving average back on, essentially everything is turning. Let's see, I can do that with this right here.
Yeah.
Moving averages. It'll give me the 50 back, right? So you got the rotation zone lower, you got the 50 turning down, and you've got the 200 turning down.
Yeah.
Right? So I think when people think about that, they go like, okay, this is a trade to the downside here. The trade obviously happened on July 1st, July 1st, right? At that time, you're saying, okay, maybe there's a buy signal here. Maybe there is. But as we talked about, and we could talk about this in a completely separate episode, right? You can trade multiple systems at the same time, even if they disagree, right? So I've talked about this before. Let's say that I had a short signal here, which I would have, except I don't really trade individual stocks short that often, not on a speculative basis, because you could have one news story. IonQ makes a deal with Apple. Whole trade's blown out of the water. Because similar to when crude oil screams higher, okay, it screams higher usually because of a supply disruption. And that usually has something to do with a military strike or sanctions or something that's completely unpredictable, right? Stocks, when they scream higher, again, it's usually not something scheduled, right? Somebody's buying somebody. Some really influential analyst has put a buy on something where he previously had a sell or a hold. Somebody made a deal with somebody for their product. It's all these things that are unpredictable, right? Doesn't even always encompass earnings. Usually earnings is a downside event or a grind higher, right? A spike higher, come down lower, and then grind.
Yeah.
When you're looking at something like this, so if I say that I would have been short, and again, I did not go short, right? Even though oddly enough, this blue line was a long signal, and look where it ended up. This was a long signal over here on May 11th.
Yeah.
Look where the sell signal closed exactly at. right? The long signal from earlier. So these things oddly end up working together even when you don't intend them to.
Yeah.
But let me get rid of the 200 and let me get rid of the 50 and let's look at just the rotation zone, right? Because I also have trend lines here. Okay, so I'm going to put this trend line here. Actually, it would go here. And then I'm going to draw this upward sloping trend line to where the trend line would have been prior to this July 1st signal, would have been here. Okay.
Yeah.
So now I have a close below the trend line here. I get a redraw here. Okay. Then I get a signal here. What I'm telling you is the first barrier is this trend line, right?
Yeah.
Now you can notice that the market seems on a daily chart to not have respected that trend line at all, right? Now I'm guessing here. I haven't looked at this, okay? Look at it on an hourly basis. It did respect it right here. It hit it and closed above, right? If I look at it on a 30-minute, yeah, again, closed above, closed below, and then extended, came up here, tested it here again,
Yeah.
right? Got above it and then closed below, then moved above it. This was the disrespect of the trend line. This was the market saying, okay, we have no respect for this trend line at all. We have that level doesn't matter to us at all.
Yeah.
Right? So that's what you're looking at with these things, is you're looking at the market respecting or not respecting it. This best fit trend line gives me a short here. If I then measure for a target based on the rotation zone, remember for a downside target, I'm going low, high, low, or I'm sorry, high, low, high, and then we get an extension.
Yeah.
So I go from here to here where I drew the best fit trend line to the high of that series, right? And then here I have my targets on them. My first target reached right there. This is the short again, right? First target here, second target here, third target there. And I usually operate with 3 targets.
Yeah.
So you're working within this particular strategy. And then the other strategies, theoretically, you could go ahead and do the other strategies. It wouldn't matter if you have it in the same stock. So if you say, okay, what if I have a buy signal here? Okay, we'll cover some of your short. What if I have a larger position than the short position on this particular strategy? No problem. Cover all the short plus the difference between the short shares and the long shares, and then that's your long position. Yeah. Then if it hits the stop for the short, you add to that to have your full long position on. See, theoretically, if I'm short 20 shares, right? Now I have a long for 50 shares, okay? I put on 50, that leaves me long 30. You say, well, I'm not getting the full, the full benefit of the long position. You are, because you're taking the short position out. So you're not absorbing those losses. And net, that gives you the whole benefit of the full 50 share long position.
Yeah. No, I get that. You have MB that's saying each stock has its own personality. Some often go up before the earnings to drop after a fantastic earnings outcome. LOL. Yeah, there's many reasons for that as well. But something else we've talked about often here is that each stock does have their own personalities, and they may react to a certain EMA better than other stocks, and that's where back testing and also just looking at it live and seeing how it reacts now, whether it's on the 5-minute, the 10-minute, the 15, the 4 hours, whatever it may be, is beneficial to kind of learn about each individual stock in itself as well.
I would say that's false.
Okay.
I would say that's completely false. Well, moving averages react to the stock's personality. Okay. They define the stock's personality.
Okay.
Because the moving average is just a function of the price you're seeing on the screen.
Right.
It's not like a 21-day moving average on IonQ is going to be in the same place as a 21-day moving average on Tesla. So what MB said, some stocks move after earnings, before earnings, all of that is in the moving averages. So moving averages don't move from one chart to the next and they're in the same place. They react to the personality of the stock. See what I'm saying? It's just 21 days of price action. It's not 21 days of Tesla's price action onto IonQ. The personality of the stock is in the indicators. It's built in. Yes. It's a function of it.
Correct. Yeah.
Like if you're somebody that trades VWAP, right? VWAP is different on one stock than it is another. Correct. Because of the personality of the stock.
Correct, but the reaction to the VWAP or the EMA
Nope.
could be like I
Look,
think two, if we're looking at two tickers, I think one of the tickers can respect the 9 EMA on its own individual stock better than say another stock may on its own individual 9 EMA.
but what you're saying is that the 9 EMA will not adjust to that. It will.
No, I'm just saying it'll
Because,
react more often than
but
not.
if those reactions, so a reaction is a larger price movement, right?
Correct.
So then the 9 EMA later on is going to have a larger price movement into it.
Is this
We
a
looked
combination
at
of what
the
came
8
first?
and the 21. We wrote a program to look at the 8 and the 21
Okay.
over about 3,000 different stocks and about 22 different commodities. And that's where we came up with the rotation zone. We didn't look at it on gold and then apply it across everything, because especially exponential moving averages, but moving averages especially, when you're saying that a stock will not react to a certain moving average, it'll have an expansion of price, that moving average then shifts to that expansion of price. Now, if we found periods of time where they don't react, but remember what an EMA is.
Yeah.
An EMA is calculated from the price action of the stock. So it literally, when something blows out, the EMA then that has it in its forward-looking math.
Yeah.
Right? So it can't react differently. It always has to react the same. It doesn't have to react differently in the moment. Like, for example, I still have IonQ here, right?
Mm-hmm.
Notice that right here didn't respect any moving averages, right? Yeah. But that doesn't mean it didn't respect them on the way down, because now this part of the moving averages has this math in it. Every time something blows out, it goes into the math of the moving averages. Correct. The moving averages don't draw their math anywhere except from the price action of the stock. See what I'm saying?
Yes.
It's like saying some days grass grows with sunlight, but other days it doesn't respect the sunlight.
No, I think it's the way, I guess using that example, then we can move on to this next one. Is I'm saying you can put 100 dogs on the same type of grass, on the same type of conditions, and maybe 70 of them will like it and 30 of them will not.
But not over time.
Okay, so
that's what you're saying now. What you're saying now is it's like it was MB that said that, right?
Correct, yes.
MB said some stocks will move before earnings and some stocks will move after earnings. Over time, the moving averages will take that price action and it will go into the math of the moving averages. The moving averages will be wider, they'll be slower, they'll be flatter, or they'll be sharper, because the math of the moving averages comes from the price action itself. It doesn't come from anywhere else. What you're saying is, and what MB is saying is, sometimes the reaction isn't the same. Agreed.
Can we take a look at NVIDIA before you go, in terms of there's setups there?
By the way, I think sometimes people think I'm arguing semantics, but I think those semantics get into people's brains as an incorrect assumption, right? Like you'll say NVIDIA trades different than Tesla. No, NVIDIA trades different than Tesla does on a given day. All stocks trade the same. They go up and they go down, and that's it. It's just by different degrees. There's a double bottom in NVIDIA. Sure you saw that, right?
That's forming, yeah. Let me take a look at it online.
Yeah, it is not a confirmed double bottom. You're correct. By the way, thanks for correcting my semantics, because it's important. It actually, and I'm not being sarcastic, this is not a double bottom. This is a potential double bottom.
I have the
now I can just look at these two and see that they're the same length, right?
I've got the break
or within the right range.
I've got the break at 272. Where do you have yours? I have that on the 4 hour, by the way.
No, you mean to the upside?
Yeah, to the upside. Okay, you're looking at daily? I was looking at the 4 hour.
Yeah, this is a daily, but it's probably on the 4 hour also. Now, the 4 hours got this extra rotation, so you can't really trade it here. This you could see as a separate double bottom, except the extension, the move is not long enough for the extension to targets.
Okay.
See what I'm saying?
Yeah.
So this particular little mini potential double bottom, the move it's reversing is here.
Yeah.
Right? So if I draw the targets there, the targets extend past the move it's reversing, so it's not valid. Does that make sense?
Yeah.
I shouldn't say it's not valid. It's not high probability.
Right.
But if I go to the daily, the break is at $200.63. I'm going to do the measurement from the shorter end because right now we have a proprietary measure of target extension and it's at about 80. That means measured move targets are generally only reaching about 80% of their full profit because of the overall structure of the market. In a normal market, it's about 120. So if I measure this target as being 210.12 in a normal market, extends 20% beyond that. Right now, it's expending 80% of that.
Your wick that is, I don't know, maybe
This one?
that wick there, yeah. What's really cool about that one is that it closed the gap from early April, and then it went ahead and bounced up. Yep, from right around that.
Yeah, that's awesome. That's a great thing to point out.
Yeah, that's pretty cool.
That's a very cool thing to point out. Now, that would not mean I bought it there just because it closed the gap.
No, 100%. But
some people would.
If you were short, I would have wanted to get out before the gap closed or right.
Totally agree. I would have gotten, if I were short, I would have gotten out somewhere around 190.77.
100%. Yeah.
Totally agree. But this is your target for NVIDIA. If it closes above 263, it should hit, again, another gap, right? See this gap here? Should hit that full gap and will likely go to about 210.12 before it pauses.
Cool. All right. Well, always appreciate your insights, my man. I will talk to you next Tuesday, sir.
All right, bud. See you next week.
Folks, bye-bye.